Welcome to the Hog Market Talk Podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
Today is May 6th. I've got Jeff here with us today. How's it going, Jeff?
Yeah, I think it's going pretty good, Mike, but we're having a little bit of a tough day again in these, especially these front-end futures on the hogs.
Yeah, let's take a look at some of these futures here. We've got June hogs here up on the board. A little bit of a concern, Jeff, if we keep going down below yesterday's type low level here, kind of around that 99.5 type level.
Yep.
We're pushing that pretty good today, aren't we?
We are. Yeah, we're kind of hoping we were out of the danger zone here. Yesterday being a really powerful day. Today we're right back at it on the sell side of it, and yeah, I don't know. It's tomorrow might be kind of interesting the way this is shaping up.
Recently, you could argue some of the hog trade probably yesterday had to do with the other cattle markets too, maybe having a little bit of an influence on it. But cattle are up today with the S&P being up pretty hard today. A few of the news items to just kind of talk about there, I think worth mentioning at least on some of these outside markets is we do appear to be trading them pretty hard today. If I look at something like this headline here, probably this had a pretty good impact on things this morning, didn't it, Jeff?
Yeah, outside market's all pretty positive, and like you say, that's been pushing the cattle market higher. For today for sure, maybe some yesterday already, but unfortunately, as us hog traders kind of get accustomed to it, oftentimes the hogs kind of forget to participate in some of those broader topics, Mike. And today's certainly one of those days.
Yeah, not necessarily following along too much with this action, but honestly, the crude oil market that's playing along with it pretty well. We've been down about 10 today, probably here most of the day. Equity's up 80, and then the grains have taken the brunt of it. We're down 10. It's kind of been holding there on Dees corn, down about 9, and the soybeans down about 15. So bigger pullback versus what we've been seeing lately, anyways. Out of this, it's been a lot of up action here real recently, hasn't it?
Yep. And over on the hog side of things, we've spent the last few days, Mike, really kind of trying to determine, is this market trading nearby fundamentals? Is it trading the outside markets? Today's a pretty good indicator. It's not trading much on the outside markets. Or is it building in a little bit of concern over the pseudorabies situation that we saw develop there last Thursday, Friday, and then, with as far as those announcements that were coming out, and then Mexico saying that they weren't going to take our variety meats here on Monday. So we've been trying to kind of watch this market and determine, which one of those factors is some of the biggest drivers. That's been a little bit difficult to determine, I guess, from day to day.
And that'd be, what day was that we traded pseudorabies? Friday?
Yeah, Friday we did right off the gate, right? So we started off significantly lower. We come back and didn't close too poorly on Friday, kind of pushed it behind us, which kind of felt like the right approach to it. It's one of those things that, from our standpoint, at least, there wouldn't appear to be any reason to really price in some lower futures prices because of the event. Everything's very well, situated as far as, getting the pigs segregated and quarantined and the testing protocols in place. I mean, I sure don't expect us to continue to hear about additional positive cases. A side note, that is one of the things that we would be watching pretty carefully here. If we start seeing additional positive cases, the market's going to take that pretty hard. Again, do not think that's going to be a thing. Seems like we're in really good shape as far as, how the industry's dealing with this. And kind of a nice little, I shouldn't say nice little, but a bit of a test run if we ever have a bigger issue. This was one to get us warmed up on versus some of the other big scary ones, right? But so we're pretty happy with the way that's going. Mexico coming out talking about the variety meats, saying they don't want to take those anymore. That's disappointing. Obviously struggling to see much of the science behind that, right? But that's the other thing the market's going to be watching. Again, think it's a small possibility of happening, but something that we're keeping in the back of our mind this week. And
Would the
each
market
day,
trade that?
yeah, so we traded that on Monday. That's why we were kind of down $1.50 at that time. And then yesterday, I think each day that moves further through this process, you'll think about, okay, if nobody else is making the announcements, if Mexico's not talking about taking any additional steps as far as cutting into the muscle cut shipments or anything like that, you feel better and better about it. And I think that's been a lot of the back and forth that we've seen on Friday, Monday, and Tuesday. So, yesterday leaving the close at $1.75 higher in a lot of these markets. Everybody feeling pretty good. Haven't had any new news on the Saudi Arabia piece. But then, switch over and talk about fundamentals for a minute here, Mike. Just another day of lower cutout is really disappointing. And that's kind of what we've been struggling with here, maybe, more often than the Saudi Arabia's discussion.
So the lower cutout, do you think it's just, are we a week early, or is this, the hog numbers have been plenty high recently, just in animals too. But we've drifted away from 100 here just a wee bit, but normally from about right now, it really, as you can see on the chart there, it just really starts to go up normally from here.
Yep.
But what's holding it back so far? And at what point do we get concerned, Jeff?
Yeah, you're hitting all the right points there, Mike. And like we've talked about on this podcast here a few weeks ago, is like, no news starts to become bad news to this in this environment, right? And what I mean by that is a steady cutout when the June futures, which is carrying a $8 to sometimes $12 premium to the nearby index. Steady cutout becomes a negative fundamental, right? And that's kind of the environment that we have gotten ourselves into. Is we need to get some higher prints on the product values on the 602 in order to maintain the premium that we have built into these futures markets. Now, it's a normal premium, so you have to recognize that, but it's still a premium, right? So clearly, if we continue to go flat on cutout, and we'll talk about cash here in a minute too, those June futures are going to keep experiencing some weight. So move into into last night's prints, and they're actually lower, gets to be pretty disappointed, obviously.
What would you say about just total numbers right now? On numbers, it still seems like we're holding a little bit higher than we would have liked. That should start to fade away pretty soon here, hasn't it?
That's definitely what we're hearing. That's definitely the seasonality of this thing, Mike. So folks that, as we've been scheduling some pigs, we've continued to hear that, hey, next week we've got fewer hogs coming down the pipe than what we had last week, type of thing. So I do think that is turning, and the cash market is representing that. I know it didn't print anything yesterday, but come out the gate there on Monday and, experiencing a similar high to what we saw last week. The undertones of the market, I think, are quite positive. I do think we're getting into a few less numbers. It's just going to take a little time for them to show up on some of the charts that we watch, and weights will continue to be a problem, or maybe that's too strong a word, but they're going to remain stubbornly high.
Seems like that story, at least I've got the screen loaded for weights there, but they're gonna stay pretty high just based on it's easier to keep feeding them at this level, cost gain wise.
Margin overfeed is going to be positive in my mind. We're going to try pretty hard to keep the heavy weights out there. If Packers flat run out of pigs, we've seen that happen in the past couple of years. Then they've dug into their inventory a little extra hard, but we're definitely not in that situation today,
Doesn't
right?
seem like it.
That might be a July, August type of conversation if it indeed happens. I do want to bounce back over to the product value side of things, Mike. I think there's a few individual primals that are worth studying, because it is a bit of the world of have and have nots over there. So if we start looking at, the belly market is the reason why the market was, the average cutout was down yesterday, and been the culprit a few different times here in the past few weeks. So you can see that, been getting beat up a little bit down into that, what is it, $130 126 going home last night. So pretty disappointing, but let's be honest, this is not going to be a primal that we have to be super concerned about going forward. The bellies are going to take care of themselves. So look at some of the halves. You switch over to the butt chart, and butts and ribs, really impressive. And what I like about that, Mike, is you think about the seasonalities that we're dealing with here, right? We're just getting into May. People are starting to get smokers out. Graduations are happening. What I see is some of those nice domestic cuts that people use this time of year are reacting very nicely. And the one that's a bit of a drag on the cutout is the bellies. So I think there's some really nice undertones in the product values and the product movement here. We're hoping just another week or two down the road and things will be all good, but we've been saying that for a few weeks too.
What other final thoughts do you got for our listeners here today, Jeff?
I think, continue to pay attention to the supply side, watch for that to turn, but, product values is what's going to drive this thing. So that's what that's what the market's, I think, really keying in on. And that's probably what we need to be keying in on as well.
All right. Sounds good. And thank you to all our listeners out there. Please click the link in the description below to reach our most recent market commentary and get a hold of us on our website as well. So thank you all for tuning in today.